Exxon Mobil earnings beating expectations, beating those estimates. We saw that earlier this morning. The stock has been higher in the trade session this morning, up by about 0.5% right now. Joining us in a CNBC exclusive is Exxon Mobil's chairman and CEO, Darren Woods. Darren, good morning. Thank you for being with us this morning. Your numbers were better than the street was expecting, but some of the headlines when you read through the news services is just talking about how earnings were down, not just for you, but for all of the oil majors, just because of where oil prices have come. How would you describe the environment right now?
Well, the first quarter was definitely down versus what we saw in the first quarter of last year. Mixed results versus the fourth quarter of last year. And so a kind of a choppy market, a mixed set of results for our different businesses. But I think importantly, what the results that we delivered in the first quarter demonstrate is the strength of the business model that we have, the strategy that we're executing, and all the transformational change that we've made and are continuing to make. It delivered, I think, very solid results for the quarter, but much more importantly, it sets the company up for handling all the uncertainty and the volatility that we're seeing today and that we anticipate, frankly, as we move through the years going forward. So we've built a company that basically is prepared and ready to handle the kind of turbulence that we're seeing in the markets today.
What makes you think that the turbulence is going to continue through the rest of this year? We're watching WTI. I think it's just below $60 a barrel this morning.
Well, the turbulence I'm speaking about is the inherent turbulence associated with our industry and the energy industry and the fact that it plays such a pivotal role in economies all around the world. And so what you tend to see over time is a lot of volatility. We've all seen the ups and downs of our industry. From our perspective, we're building a business that does very, very well in the bottom of the trough. And then obviously when you're at the top of the trough, things look a lot better. But everything that we're doing is focused on growing value and making sure that we have a business and a strategy that's robust to every piece of the cycle of the commodity cycle, not just the tops of the market.
So why do you think prices have been under so much pressure this last month or even couple of months, if you're watching some of these things? Is it concerns about a global slowdown? Is it concerns about more production coming online, or maybe OPEC pumping more too?
Yeah, I think both of those things are playing into it. If you look at the first quarter, demand was very, very strong. There was a lot of supply in the market, which depressed prices when this imbalance between demand and supply. As we've headed into the second quarter, all the uncertainty that's out there today, the questions around how the tariffs are going to impact economic growth around the world is leading to a lot of speculation and uncertainty around where demand goes. That then puts concerns and pressure on the demand side of the equation. And of course, OPEC has talked about increasing supply. And so when you have lower demand and higher supply, you're going to get a drop in prices. A lot of that's forecasted or comprehending what people participate or expect to happen. We'll see how it actually plays out.
I know it's not as easy as, turning on a spigot or turning it off. But when prices come down, what do you do just in terms of production? What can we expect to see from you all?
So we've seen a very substantial change in the industry's ability to ramp production down with the unconventional resource. So that resource is much more short cycle. And so depending on the pricing and the economics for every individual player, they'll make their decisions about what they choose to do and can take production off much faster today than maybe what you have seen historically with long cycle projects. For our company, the business that we've built, frankly, prices can go low and stay low for quite some time. And it won't necessitate a change in what we're doing with our distributions to shareholders or to the capital plans that we have and the investments that we're making. What we'll be focused on instead is maximizing NPV and the economics of what we're doing. So with the ability to adjust and the short cycle investments, those will all be made on economic decisions about where prices are at today and what we think is going to happen in the future and how do we maximize the value of that. But the good news is with the balance sheet that we have, with the earnings power that we have, with the cash that we're generating, we could stay right where we're at and continue with the strategy that we've had in place and the plans that we shared with our investors in December through this year and into next year, even at very low prices.
I think Joe has a question too. Joe?
Yeah, thanks. It's been pointed out, Darren, and thanks for coming on. It's been pointed out that, oil's come down quite a bit, and I don't know whether it's it's supply. I think it's a combination of both, obviously. But gasoline prices, even though I don't think gasoline prices were ever under $2 in any state. I don't think anyone's found that. Maybe there one guest. I don't know. I don't know where the president got that. But they've come down a little, but not as much as they should. Can you explain that? And I guess usually when we ask someone that, they go back to the local markets and refiners, and you can't really explain what any given gas station is looking at when it sets prices.
Well, I think there's two supply-demand balances to look at, and you point out crude, which is the largest cost that goes into a barrel of gasoline or a gallon of gasoline, and as that drops off, you'd expect to see some downward pressure. The other supply and demand balance, though, is the refining capacity that's available to meet the demand for gasoline. So crude is the feedstock to refineries that then make the petroleum products, and depending on how much capacity is available to run the crude, you get different supply-demand balances. So what I would say in refining, as refineries around the world either go into turnarounds to do maintenance, if you've got reliability issues, you can see a lot of choppiness in the supply of petroleum products just based on how well refineries, frankly, around the world are running. And what we see as demand picks up, that puts upward pressure on prices. But if refineries have trouble or are in maintenance, you'll see the supply drop off and prices rise. And I think what you're seeing in the markets today is that balance of refining capacity to meet the demand that's out there.